foreign investors will they haven't done it yet, but they are willing to buy at a zero cap, or that's theoretically possible, but buy at a zero cap because they want to take their money out of their economy and put it into our economy. And they're willing to overpay just to do that.
Hello, everybody. This is Jake Stenziano, host of Wheelbarrow Props Podcast, here with my co-host, the multifamily mentor, the coach, the chef, the father of six, the best-selling author, the G-Daddy, Gino Barbo. Gino, how's it going?
Mr. Stenziano, this is going to be a good podcast today, bro. How you doing?
Yeah, we're talking migration, all right? The demographic show potentially. But hey, we have a great guest today. Today's guest is Charles Dobens. Charles is a multifamily investor, podcaster, attorney, and coach. In his investing career, Charles has personally acquired over $20 million in apartments. So without further ado, Charles, welcome to the show.
Thank you so much, gentlemen. I appreciate it. It's going to be another good time again, like we had last time, I'm sure. Yes, ask me anything you want. And
hey, listen, we make it happen on this show, and I just want to hear about your real estate journey. Everybody, starts in different places. I thought I was going to be a gym teacher, and Gino was, the pizza
You're still
guy.
Qualified to do that, Jake, by the way.
No, it's actually mentally I'm not.
No,
and I'm probably not allowed in like an actual public school. So that's it.
Oh, you might. Yeah, exactly. You got that.
That's a whole nother conversation though. So this is about you. We want to hear about you today.
Within 500 feet of us. I can appreciate that. That's why when you guys do the search, when you're looking on the the sex offender registry, Jake's name.
We're not talking about that. Okay. This is a kid's show. All right. We keep it PG here. Gino's got 6 kids.
Let his kids watch this. Big mistake, pal. Big mistake. So, yeah. Well, my journey started when I was young. I've always wanted to own apartments. All the people that I knew who had money, who were making millions. They all owned apartments. That's just the way I remember. And I remember growing up, and I don't know if you guys were the same way, but if ever I found out that I was talking to somebody that owned apartments, I would just tell me everything how do I do it? What do I have to do next? And I remember being down in Nantucket with a bunch of my buddies after college, and a guy and his wife invited us on their 50-foot yacht, and the guy was a plumber. And I said, how does a plumber afford a boat like this? He goes, well, I'm retired now. I said, but I owned 80 apartments is what he said. 80 apartments. That's all he owned. And this is how he made all his millions. I thought, oh shit, I got to do this. This guy's living the life I want. And I remember sitting down at a little breakfast spot that I go to, before I went out and sold insurance in the morning. Worst job in the world. I tell you, if anybody is watching this show and they're selling insurance, listen to what we are teaching you here, and you don't want to end up that way. But I listened to these people, the husband and wife, and they come in the morning, and they owned apartments, and they would just manage their apartments, and they talked about Section 8, and they talked about all the bad stuff. Probably because it's a lot more fun to talk about, but I didn't care. I didn't care how bad any story they could tell me. They were in the business that I wanted to be in. Mm-hmm. And so, then I finally gave up on insurance. My dad was highly successful in insurance. I would never be like him. And so I went to law school because I always wanted to be a lawyer. And while I was in law school, I was still in a particular aspect of the insurance business, a little niche business, and I was doing very well financially. So when I got out of law school, I stayed in the insurance business and I opened up my own firm. Did that for about 10 years. And finally I was ready to I hated life. Sunday nights were the worst time of the week. If you know what I'm talking about.
They didn't have Sunday Night Football yet.
They didn't. Well, let me see. Back then it was Howard Cosell when he still had hair. Okay, Gino. I think I gotta explain to Jake who Howard Cosell was because he doesn't even know. You might need to Google that one, young man. But I couldn't take it, and so I finally
infomercials.
Yeah, we had commercials. Yeah, but the thing is, I don't think the Super Bowl ads were anything like they are today.
Painful.
By the way, didn't Tom Brady win the Super Bowl again on last Sunday with his ad, his Hulu ad?
Mm-hmm.
He won the Super Bowl.
You guys going to pay him $30 million? That's all I got to say. You're going to pay a 41-year-old $30 million to play quarterback. That's all I'm saying. So
Well, they're going to pay Mahomes $40 million, and he's not going to have anybody to throw to because all the money will be gone. So you just saw Kansas City in the Super Bowl for the last time in the next 50 years. So thankfully, and I really appreciate that because Mahomes, man, that guy's, I mean, he's better than he was at his best.
Mm-hmm. And he's only 24 years old. That's the thing. He's really, really young. He's really, really young.
Oh my
So let's
God.
get back to the real estate thing.
Okay. So anyway, all right. So I tell my wife, I'm done. I want out. And she says, what do you want to do? I said, I've always wanted to own apartments. And she said, well, let's do it. So I sold my insurance firm, took the money I had there, which wasn't a whole lot. I mean, people think, oh, well, you had money to start with. Well, not really. But, I went out and we put a couple deals together, and I went out there, I, took the gurus classes and learned all this stuff. And of course I had the law background. I was a lawyer by that time. And let me just tell you how it got started. Like at the beginning, I knew early on because of my insurance sales that this was a sales and marketing business. You have to make offers. If you're not making offers, this is nothing more than a very expensive hobby. And if you think about this as a sales and marketing business, when you make an offer, you are the equivalent of a group insurance sales rep sitting in the lobby of the owner's, the president's office, waiting to go in there and pitch your group insurance plan. And there are 5 other guys right outside going to do the same thing as soon as you leave. Your offer has to be better than all the other guys. And so you have to know when you make that offer, it's got to look good on all aspects, the terms, the price. And so when I first started making offers or started in this business, I set it as a goal to make 2 offers a week. And I know that there's some people say, I make an offer a day. Like, all right, well, I just didn't have looking in the locations I was looking at. I just didn't have the stock at the time to do that.
Mm-hmm.
So I made sure that I did 2 offers a week. And I met this broker she was in Cincinnati, and she said, okay, I know what you're looking for. As soon as I find it for you, I will call you, and you better have your checkbook ready. I said, oh, okay, fine. So I go off and do my thing. And 2 weeks later, she calls me up and says, I found it. Come on out and take a look at it and bring your checkbook. And so we went out and looked at it, and it was a really nice property, and the numbers made sense. And so we ended up buying it. But what we, just to give people an idea, all I wanted to do in the first year was buy 20. And my plan was I was going to get to 1,000. I would just double everything I made the whole way through. And that's how I would get to 1,000. And so I set my goal at 20. Well, the first one she brought me was 40. I was like, oh, geez, 40, man, that's twice my goal. I don't know if I can handle that. And well, guess what? I bought the 40. And then I bought the 88 across the street 30 days later. So now within 6 months, I own 128 units, and it just progressed from there. And I'm telling you, you listen to these people. I've had great properties. I've had crappy properties. I've had to give properties back to the bank. I've kept properties and made millions. So I've run the whole entire spectrum. So I've the good, the bad, and the ugly is how I teach, because I don't want to see people make the same mistake I did.
Mm-hmm.
I made a lot of mistakes.
Charlie, you made a couple things there I want to touch back on. Everybody out there, business is all about sales and marketing. And those are 2 different things. Sales is one thing, marketing is another thing. And in real estate, in multifamily, you're either marketing for dollars or you're marketing for deals. And you better be doing both, because you better have the money before the deal comes. So I want to square that away with people and make people understand that you're not just going to go out there and, if you're fortunate like Jake and I, we bought our own deals internally, the first 1,000 units just by refi and rolling, but it doesn't always work that way. If you get into it, you buy your own with the proof of concept, then after that, you're going to have to start out there and talking to investors and if that's not your strong suit, find a partner or find somebody who does, but it's really important that you do that. Charlie, what kind of deals were you looking at? Let's talk about the market itself and your parameters, your buying parameters, and what you saw in the market, especially Cincinnati, and what deals worked for you.
Yeah. Okay. But before I move on, what you just said is spot on. I mean, you have to be looking at both sides of the equation.
Mm-hmm.
I mean, you have to identify in your business, you've got to identify who your customers are. And in this business, we have multiple customers. We have sellers. They're our first customer. We have investors. We have brokers. We have, these tenants. These are our customers to make a successful business. And you always have to be thinking about your customers through the whole thing. So what we did is we live in Massachusetts. I've now since moved to New Hampshire, just in case the IRS is listening. I actually do live in New Hampshire. And so, we were living in Massachusetts, and there was no way we were going to buy in Massachusetts. Massachusetts was just stupid. It was expensive. The landlord-tenant laws were so in favor of the tenants, it was ridiculous. And it just didn't make sense to buy in Massachusetts when you could buy other parts of the country that made sense. My wife is from Michigan, and her family owned apartments in Michigan. Now, I say that, and you're all going to say, like, oh, well, you started out this way. No, that's not the case at all. But they had a footprint in Michigan. So that was one of the first areas we started looking in, was Michigan, because my father-in-law was going to be an investor in the deal, and he would feel more comfortable if he could go out and look and touch and feel the building. So Michigan was one of the first places we looked at. And at the time, Michigan was, everything was going great. I mean, you could write a book on emerging markets and just list every single city because everything was emerging. As soon as the market crashed, none of them were emerging anymore. So you've got to be very careful about how you buy the properties so that you are able to make it through the swings. Then we looked at Texas. We bought properties in Texas. We bought properties in Kentucky, Ohio. And yeah, I'll tell you, the way I teach is, you can find deals in your own backyard. You can. If that's where you want to be, then just focus on your backyard. But what I want to do is, where do I want to be in 5 years? I mean, you guys have already kind of nailed that question, and I'm very jealous of where you guys are in that process. But I want to be someplace else in 5 years. So now we're looking in that area as well. So we bought in different places, and my advice to people is, if you don't know the market, don't buy there. I mean, there's stuff about Cincinnati, there's stuff about Baltimore that if you don't understand, if you buy on the wrong street in Baltimore or in Cincinnati, you have missed it by a county mile. You might as well be in a different state, because if you live on that street and that street's not in the path of progress, or it's in one of the good neighborhoods, forget it. It's never going to change. And that's the way some of these places are. But you don't know that if you're not familiar with those towns, or so you've got to go out there and really get to know the market that you're looking to invest in.
So where do you want to be in 5 years? I mean, I tell a lot of students, because I did the same thing back 3 years ago. I wanted to be in Jacksonville. So I ended up making Jacksonville my backyard from New York, and I actually made the move. And people are like, well, how'd you do that? Well, it's all about clarity. I mean, do you want to get into multifamily? Do you want to have a different change of lifestyle? Talk about the demographic shift you're seeing as far as so you're talking Massachusetts. Has it been that way for the last 30 years about not finding deals in Massachusetts, and that's just how it is, and investing outside of your backyard? Is that a recent phenomenon like everyone thinks it is?
Oh, wait, no, I don't think because all the people that I grew up idolizing, they were all doing deals in their own backyard. They're all doing deals up in, southern New Hampshire. And that's because they didn't think, oh, I got to go to Fort Worth, Texas to build my multifamily empire. No, they did it right in New Hampshire. So I think this whole concept of looking 1,000 miles away, I think that's the novel concept. I can tell you, the tools that we have right here on my desk to look at properties all over the country, we've never had before. It's as good as being there. That Google Earth, I can walk the streets of that property without leaving my computer here. We never had that aspect of it, years ago. So I think the whole point of looking 1,000 miles away, that's the novel concept. And then looking in your own backyard, hey, you can still do that, man. It doesn't hurt to look in your own backyard.
But in your own backyard, though, what do the numbers look like? You're not buying in your own backyard. That's what I'm saying. So you're looking out. How are these people making these deals work? That's what I'm trying to figure out. Like, people are still buying and transacting. Is it just a capital gain? I mean, a cap appreciation where they're really speculating? They're really not. It's not really truly investing. It just seems like you're speculating, buying a stock, hoping it continues to go up. Is that what's going on in those markets, you think?
And they're looking for a place to park their money because they got a lot of cash, and they want to do it in a hard asset. And so they're buying these really low cap rates. I mean, listen, I interviewed a guy the other day, and man, it was a great interview where he said foreign investors will, they haven't done it yet, but they are willing to buy at a zero cap, or that's theoretically possible, but buy at a zero cap because they want to take their money out of their economy and put it into our economy. And they're willing to overpay just to do that. So in the primary markets, that's what we're seeing. That's why you're not like Boston, Miami. We're not able to make the numbers work in those marketplaces because of so
Different
many
strategy. It's wealth
factors.
preservation.
Yeah,
They're trying to preserve the wealth. It's a totally different strategy.
yeah, it's not cash flow. I mean, the reason why we're not in the real estate business. We are in the cash flow business, and we're looking to buy cash flow in the form of multifamily property. But if there's no cash flow, that's a totally different strategy. You know, that's why
Gino, what do they say about that if there's no cash flow?
Let the grass grow.
Let the grass grow, baby. That's why I'm wearing the green today.
Charles, what you're saying to me basically is this coronavirus has some serious implications for multifamily because they can't even report the number of deaths. They don't know what's going on there. Everything's when you're.
Wait a minute, are we talking about Iowa?
No, well, we can get into.
Are we talking about Corona's beer? Is the stock price falling because its name is association? There's just so much negative here.
Well, no,
the guy from Michelob Light's like, why couldn't we have thought of that? Why couldn't we have thought of that?
I'm talking about what's going on overseas because, like you said, that money from Asia is coming. It's the same thing with Hawaii. I talk to Hawaii investors all the time. Hawaii, with the Asian and the Japanese money flowing into there, I know there's a barrier to entry. There's only X amount of land there, but there's no reason. I mean, you're buying for millions of dollars. So I think what's going on in Asia is just going to perpetuate the multifamily, and we're just going to continue to rise with the demographics and with the money flow coming in. It's going to be harder and harder to find deals. So, that's just my two cents on it. What do you?
Time to get out the hammer, right? Charles is going to build some stuff. I think where he's going. Yeah.
I'm just going to sit back and let you guys.
I want to hear about it.
No, you're absolutely right. Listen, I did a call yesterday with an investor out of Chicago, and she's building in Seattle, on Oregon, Portland, just outside of Portland. She's building, and she's been a builder for years, lady. And we talked about what's going on, and it's so great to listen to somebody who's been in this business for a million years and has will tell it to you straight. I said, well, you got workforce housing, and the government's looking to give you money to build workforce housing. She goes, I don't touch their money anymore. I go out there, I get investor money, I get bank money. I will not do business with the government anymore. I'm like, oh, sister, I know what you're talking about. They're the worst partners in the world to do business with. So she goes out there and just with private money, she's doing the exact same thing we're doing with ground up, but I mean, with performing assets, she's doing it from ground up, and her numbers are sick.
Is she holding?
Yeah, she owns and operates everything she builds.
Builds and holds.
Builds and holds.
So
and I said, I mapped it out for her, and she gave me such great information. And based upon my conversation with her, I looked and saw that I was doing everything kind of backwards. And so we looked at her numbers, because the next step I have to do is buy the land. I'm looking to buy the land. So I have to try to figure out how many units can I get on the land at what price. Mm-hmm. And the deal that she just did out in Oregon, it was $14,000 per unit per acre. So based upon what the land cost was, the building into the per unit cost was $14,000 of land. That's all she was paying for the land. And her apartments are beautiful. Her expense ratio is in like below 24% on these properties. It's just cash flowing like a banshee. And she went out and did the exact same thing we do, raised the private money, had a sponsor, the whole work. She puts the deals together the exact same way that we do.
So let me ask you, Charles, what do you think that the negative of that model is? Other than, for me, it's time value. You don't have the money up front. You've got probably 24 to 36 month window, depending on permits and all that. So there is risk in that. And if all of a sudden the cycle changes and you're stuck and you've got bridge debt and then you have to convert, what do you see are the pitfalls? Because I think everything else you're talking about is right, because there's going to be no deferred maintenance. They're brand new. You're going to get top rents on that. So you have no CapEx at all to deal with. They're easy to manage. So what do you see the pitfalls of that strategy?
Okay. You know what? You nailed it. It's what goes on in the economy. It comes back down to customers. Everything we do comes back down to customers. Are the customers going to be there in 36 months when, we get our occupancy permit? Are we going to be able to fill these places up? She's had a waiting list to get in. I know I'm talking about building here in Southern New Hampshire. All of the performing assets right now have a waiting list to get in.
Mm-hmm.
And I'm telling you guys, one of the things that I taught for years, and I realized I kind of taught it incorrectly, how do you figure out what market to move to? And I said, one of the easiest ways to do it is look to see what states are gaining congressional seats and which states are losing congressional seats. And, because at the time, my argument was, because those states that are losing congressional seats are losing population. And the fact is that nobody's losing population in this country. They're just growing at a slower rate than another state. That's it. So that's, we're always 36 months from now, we got a waiting list now. There's going to be a waiting list 36 months from now because the barriers to entry in this business are so high and we're not creating product fast enough. We just aren't. And first off, the government's mostly to blame for all of that. But that's the way it goes.
So do you see that's what's going on in California? Also, there's not enough to actually build in California is very difficult. There's a lot more demand for apartments and they're not bringing product on. And that's what's allowing all these rents to rise precipitously and they won't hold on. And so where you are in New Hampshire, there's not enough product coming on either, right? I'm assuming there's not a lot of building going on. So is that why you see the opportunity there?
Yeah, because a lot of these builders, they're waiting, the cost, as they say, because they were figuring, I talked to a builder here in town, and he said, it's going to cost me $180,000 per unit to build apartments up here, $180,000 per unit. Now, just think about it. I mean, how many homes can you buy for $180,000 around the country? I mean, that buys you a beautiful home in places like, well, maybe not Knoxville, because ever since, Jake moved there, and
10 years ago would have it's changed pretty quickly though.
Yeah, but I mean, when you moved in, you doubled the GDP of Knoxville. So,
I bring the pain behind me. What can I say?
Actually, a house down there is $150. You get a house down there for $150. So
exactly.
Point taken. Yes.
You can't anymore though.
Average house?
Because my in-laws were looking for a second home, and they're like, hey, maybe in the 150 to 200 range. The barrier to entry now is $300K. For just a decent little rancher, and it's just what it is. It's like you could have done that 10 years ago. It was there, and now it's 300,000. So
yeah. And one of the problems though is, and this is interesting, is for some of the workforce housing here in Southern New Hampshire, they're getting about $1,500 per month in rent, 2-bedroom. This builder that I was talking to, she's getting $1,500 per month in rent out in Seattle. Or Portland. She paid $14,000 per unit for the land. She's getting the same amount of rent that we're getting out here in New Hampshire. Now that's something you got to think about. Is New Hampshire the right place you want to be, or is there other places you want to go and do the same thing? She's from Chicago. She's building out there because
what did she build for?
She built for about let me see, it was about $105,000 per unit. No, it was hold on a second. It was about $115 per square foot is what she built for.
Okay.
Yeah, hard cost. So yeah, so that's so you can't do that around here.
Did she have a GC on her team, or is she the GC?
She's been doing this for years. She's got the whole team, the architect, the project manager.
She's not subbing that out. Those people are on the team, so that helps out the cost as well.
Because she's got to bring them out there to Oregon. She is using subs out there, but her daughter actually physically moved.
I'm not talking about the subs, but like the GC, she's not getting an upcharge for a GC. The GC's on the team.
On the team,
behind the payroll, bringing in the subs, etc.
Exactly.
That's right. I got you. That makes a lot of sense.
True.
Because I think that's where you're going to see a cost bump if the GC is not on the team. And maybe not like a payroll situation, and they try to hit you up with 20-30% markup, you're going to get hit there.
So Charles, where do you see yourself in the next 5 years investing? Are you going to still continue to invest in apartments? You're going to go doing ground up? You're going to be moving to a different market? Where do you see yourself in 5 years?
Okay, the last two, ground up and moving to a different market. First off, I physically am going to be moving outside of New England. I'm done. I've had it. I might go skiing this week, but we'll see. I want to go play golf. I was in the simulator last week, and I was just loving it. Like, why can't I do this every day? Just go out there and hit golf balls. And so that's kind of my plan. Is there's no need for me to be up around here. The business that we're in. Look at you guys. We can be anywhere in the world.
It's not safe. I have a rule. Like I don't go, into New York anytime after October anymore, and I don't go, up there until at least May. So it's because I don't think humans should be, subjected to that type of weather. I don't think it's safe. I don't think they should be living like that. I think it's like prehistoric. So just,
right.
keep yourself safe, Charles.
My ancestors migrated. Why can't I migrate?
Charles, I like that. You have vast experience. I'm not going to say you're elderly, but you're getting up there in age. If I'm a young guy listening to you right now, convince me of why living up there doesn't make sense. This is a serious question because I want to talk to all the young people up there, and I don't want them to come down to New York, Florida, because we've got a little bubble going on here. It's nice down here. But at the same token, just think objectively. Think about what's going on with the taxes, with the quality of living, the cost of living. I mean, try to get some converts to move down. What would you say to them on the show right now?
Look at me and look at Gino. You can see Gino's arms, and I have to wear long sleeves. And I actually have my sweater. Look at, I got my little woolly right here. I mean, this is crazy. You're probably sitting in AC, and I got to go turn the heat up. I mean, and then I get into my car in the garage downstairs, and I drive out to my next garage, and so I don't have to be outside. And at 4:30 in the afternoon, it's dark out, and I'm done. This is just not a healthy lifestyle. Down in South Carolina, we would get up in the morning, we'd go out and ride bikes on the beach. That was just a great way to start the day. It was just an awesome lifestyle. It's all about lifestyle. It's like, this is, I'm done. I want to.
You get one shot at this.
Yeah, that's right. We got one shot and then we're done. Life is too short, and life is too hard to take away someone else's joy.
So, Jake, I've got a theory here. I think God has got a great sense of humor for all of us in the Northeast. Summertime is amazing. It's transformative. It's beautiful. You're outside. Once Labor Day comes, you can feel the chill. You're like, you know what? It's over. But I can deal with it. So you're tricked into October. It's a beautiful. The leaves are, everyone's like the little foliage. I want the leaves on the damn trees, everybody. I don't care if they change colors in fall.
Everything, right?
You know what I'm saying?
Nice sweatshirt on.
So you're tricked into it.
He's such a chick.
So Thanksgiving comes. You're like, oh, this is beautiful. The holiday season. So we're still getting tricked. So once Christmas is there, and after that, it's all downhill for the next 3 months up in New York. But you're saying to yourself, it's coming.
You're still too far into it, man. Okay. October is done.
Hold on, let me finish.
Let me tell you. Okay, go ahead, finish, and I'm going to tell you.
February comes. You're like, you know what? You got a 60-degree day. Then you get the polar vortex and the bombs and all this crap, and it's 6 degrees outside during the day. But you're still sticking in it because you're a New Yorker and you're tough, and you're saying to yourself, "What the hell?" And that's what happened to me. March comes. You see a little bit of the light. You got St. Patty's Day. You're out in the parade. It's always 34 degrees and cold. You get to April, not bad. Once May comes, you got the 60-degree days, and then you're back to June. So you got June, July, and August, basically 3 months out of the year, and you're tricked into thinking, this is great. Then you just forget, and it goes through the whole cycle every year, and I went through it every year. And everybody out there, Florida is hot in July and August. It's okay, but I'd rather be 92 and hot as hell than have 21 degrees for 3 months straight. So that's my 2 cents on it, Charles. What do you think?
Okay. That is actually a scientific law, what you just said. And it's called Newton's second law of motion. A body at rest tends to remain at rest. So here I am, February. I'm like, okay, I got 2 or 3 more months of this, and that, but the whole time for me to get up and physically move my body down to South Carolina, that takes a little bit of work. Do I really? Because then I have to work on make sure nobody, everything's covered while I'm away, and it takes a little bit of effort. Whereas most people just sit and they just sit there, okay, I'll just take it for now because the weather's going to change and it'll get better.
Exactly.
It's just a body at rest, and I don't want this body to rest up here.
We were down there last week, by the way, in Folly Beach, looking at a deal, and it was 60 degrees and beautiful.
Isn't it? It's just gorgeous. It's just a way to live. Those people just know how to live.
I think people, when they hear this, my story, picture this, Jake. It's February 2014. It is 6 degrees for 2 weeks straight. I've got a hairdryer in the restaurant on my knees trying to thaw out the pipes. And I'm saying to myself, this is not, my pipes are freezing because it was 6 degrees during the day. It was like, and that's what, like you said, Charles, it was a body at rest. But I finally said to myself, I can't take this anymore. So everyone needs to look at pain. If you have enough pain, you're trying to move away from the pain. So like Charles just said, my motion was moving away from that pain. And that's what it took me to actually get up and say, I don't want to deal with this anymore. I'm getting older.
You guys haven't even started talking about taxes yet.
Well, so that's the cost of living. So how do you analyze that? You got the quality of living and the cost of living. And like Jake said, prices have elevated down here because there has been a population shift. But still, you can work remotely. You can still make the salaries you're making up north. That whole tax base with what Trump did with the tax plan is really hurt a lot of people up in the Northeast also.
I moved to New Hampshire because of Trump. And, I don't know about you guys, but I just did an event in Connecticut last weekend or 2 weekends ago. And I mentioned Trump twice in the whole time I'm talking. One of them was a joke about my son, and it's a very funny joke, and everybody laughs. But you can't tell what my politics are just by that joke. And then I mentioned him again in a way that I've been referencing him for the last 10 years while I've been teaching, and it's got nothing to do. This happened before he was president. At halftime, I had a woman come up and want her money back because I talked too much about Trump. It's like, oh, come on, give me a break. So
we're a super sensitive society.
It is like relax.
Charles, you have to always tell them this is what you should say. Honestly, it's not the policies, it's the policies. It's not the politics. Let's separate the two. The policies that he enacted are hurting the blue states, right? I mean, that's what's going on. You have that migration going on, and just look at his policies and who's going to be running in 2020. Look at their policies and decide upon that. If he's reelected, those policies are going to continue to go, and people are going to be continuing migrating out of blue states and going to red states, and that's just going to continue to happen.
Think about what he did, the policy that he changed in the blue states, as far as the taxation and lack of deductibility of the high property taxes.
Yes.
Let me tell you something. That's actually a very fair thing they did for the whole country, is to take away that deductibility. It penalized me. I moved to New Hampshire to get out because my house down in Massachusetts is $1 million house and the taxes are through the roof. But it penalized me in the blue states, but it was very fair to you guys in Florida, and because you were subsidizing me with that policy. Mm-hmm. And so that's where the politicians have figured it was fair to do for years. And he went in there and changed it and made it fair. Okay, so I got screwed a little bit, but I migrated to avoid it. Other people couldn't do that, but his policy was the right one. Mm-hmm. Whether you like him or not, that's really fair. We're just looking for equity among everybody. So
I agree with that. Before we go to the short answers, I just want you to give everybody out there, the listeners, just give them a tip. How did they get into this multifamily game? You got in a circuitous route. You did insurance, then you did law. Jake was the pharmaceutical rep looking to get out of his job. I was the pizza guy. I think we all had something in common. We all had some business acumen. We wanted to do this because I think multifamily is ultimately a business.
It is.
Systems and culture. But how do you get into it? I mean, give us a couple of tips on, how to get into this business.
Boy, I got to tell you, I think we kind of talked about it here, is your pain has to finally get to you where you just have to say, I can't do this anymore. Mm-hmm. I think we all reached that point where, like Jake said, we got one chance at this. And if we don't make that change, no one else is going to do it for us. Mm-hmm. So if you had that desire, that burning desire to do this, you got to keep falling forward and every day move in that direction towards accomplishing your goals. And that is what I did, is I knew that this is what I wanted to do, and I wasn't going to stop until it was done. And, so people say, well, okay, well, it sounds good to you, but no, guys, anybody can do it. I mean, look at Jake, for crying out loud. I mean, geez, look at the guy. He can't even hear me.
How the hell did that happen?
How did that happen?
He's got a sword behind him. Watch out, Charlie. He's got the sword hanging on the wall over there. So.
Yeah, 1,000 miles away, I'm safe now. Yeah. So, yeah, but no, you got to get out there and you got to feel the pain. And I felt the pain. I hated it.
And once you feel the pain, you got to bring the pain.
Then you got to. That's what it's all about. Then it's gonna hurt for a couple of years, guys. It's gonna hurt, and you're gonna go out there and make it work. But once you do it, it's the greatest lifestyle in the world. It really is. Everything that all those reasons why I would hang on every word of those apartment investors that I knew growing up was I knew that I wanted their lifestyle. I knew I wanted to do the same business they were in, and best move I ever made. Best move I ever made. So
amen to that. Let's take a quick time out to hear from our sponsor. Gino and I are super excited to tell you about the audiobook version of The Honeybee, which was recently released.
The Honeybee tells the story of Noah, a disappointed, disaffected salesman who feels like his life is going nowhere until the day he has a chance encounter with a man named Tom Barnum, the beekeeper. In his charming, down-home way, Tom, the bee man, teaches Noah and his wife Emma how to grow their personal wealth using the lessons he learned from his beekeeping passion.
In the audio version, Gino and I sat down for an exclusive interview after each chapter where we elaborate on the stings we felt throughout the business, the importance of scaling up, and how we've been able to create multiple streams of revenue.
For more information and to get your copy of the audiobook, visit jakeandgino.com/honeybee.
All right, we are back. Charlie, what is your best habit for success?
Plan your day. I mean, I got my planner right here. Every day I map it out. Sunday nights, Sunday mornings, I sit there and I map out my week. I look back at the week that just passed. I see how successful I was that week towards accomplishing my goals. And, it's in goal setting and just every day focus. I got up early this morning. I mapped out exactly what I have to do today, the things I need to accomplish so that at the end of the week, I can look back and say I had a great week. Don't let these days go by without analyzing every single one of them and knowing that what you need to do that day to get you to that goal. Otherwise, you're just a ship that's sailing listless, and that's no way to go through life. We only have one chance in that, and I keep quoting that. That was from Jake. Let me write that one down. We only have one chance.
Hey, I spend more time planning my week and focus than anything else I do. It is the most important time. I probably spent 3 to 4 hours this week going over that. And it was like on a Sunday. So if you guys want to know what it takes.
Yeah. I wake up Sunday morning and I go back and I look to see how I did, and I tell you, I write a little narrative, like this is right there. You see, there's my whole little narrative of what happened the week before. And one time I was able to successfully write, I had a phenomenal week. I moved and then other times you say, hey, this was a crappy week. I was burnt out. But you just get you
get hit in the face in this business and it's unavoidable, unfortunately.
Yep, exactly. So cool.
What is your best tip for scaling in multifamily?
Oh, you gotta delegate. You gotta delegate. I tell you, best moves I ever made was bringing on people. I'm slow to hire and quick to fire. But you've got to have other people doing some of the work for you. And as you grow, like you were saying, Gino, this is a business, and you need to hire people to do certain things. And that starts at the very beginning. Mm-hmm. And once you learn, and what we do is when we teach how to build this business, you figure out the systems and then you outsource the systems, get them off your desk. Because many times you're still having to work your regular job while this is going on, while you're building your multifamily business, and you need other people to do it for you. I've got some great VAs, and they just know exactly what to do. And like people say, hey, I really liked your post on LinkedIn. I'm like, oh, I don't know. What was it this week? Like, cause they handle all that. I don't even touch that stuff. But that's what it's all about.
I think the dictate, delegate, and disappear quote is cute. I don't think you can completely disappear. I think you always have to be, working with your folks. But I think it's a great one. What about a book recommendation or two? And it can be a book on scale. It can be a book on systems. What are you liking these days?
Okay, I'm trying to figure out who recommended this book for me, and I'm wondering if we talked about this on my podcast to us. Did you guys recommend the book Big Shifts Ahead?
Yes, by Chris Porter. Yes.
Okay. All right. Let me just tell you, I don't want to be. I'll give you my own book recommendation, but I want to just tell you, I got that book, and it is fascinating. It is absolutely fascinating. Big Shifts Ahead by Chris Porter and John Burns, and just the guy had me at the fact that the naming of the generations and the grouping of is all wrong. And he got it with me. I'm 1964. I'm a baby boomer. I am the last year of the baby boomers. And 1946 was the first year of the baby boomers. I have zero in common with somebody that was born in 1946. But for some reason, we're lumped together into this one generational group, and that's all wrong. And so that type of thing that the guy had me hooked at that point. And so, folks, I'm actually gonna do a book report on that, coming up for my students. But that is a phenomenal book. Big shifts ahead. But the other one that I like is Profit First by Michael Michalowicz, and the way he teaches about business. I just love that concept that he came up with. And also I'm doing Tony Robbins' book on money. It's when you listen, that book will make you mad when you hear about how Wall Street has just screwed us over for years. So yeah, I'm like Jake, and that I don't read. I went through 4 years of law school. I didn't read a book, but and I got the highest passing score in the history of the Massachusetts bar exam. I don't know if you guys knew that about me.
Did not.
You're right. The Honeybee was a great book. No, I think Big Shifts Ahead was awesome. I love the part where they're talking about the parents and trailing behind the kids, and the kids are moving to the places where the jobs are. And I know you touched on you want to golf and everything, but the parents are actually following the kids to these states, versus moving down the road to the the country club. So that's a few things that I really took out of that book that were fascinating as well. Unbelievable.
It'll get you thinking so differently.
Oh yeah. What project are you excited about right now?
Oh, I got a couple of different projects. I'm doing the event in Orlando, but long term, I'm very excited about building. I really want to own land in the next 6 months to build. And I think that's really where, in the next 10 years of my life, that's the direction I'm going to go in, is to build these properties. And I've got a client of mine, a student who he and I are partnering together on doing it. Sharp kid, and the two of us are going to go out there and see what we can come up with. So it's a lot of fun. And this is something else. You always have to have that long-term vision. You never get old. My dad, 82 years old, worked right up until the day he died. And, when the doctor came in and finally told him, nothing more we can do for you, make your plans. And, his first reaction was, darn it, I just wanted another 10 years. I mean, and that's the way I want to go. Like, I'm not done yet. There's so much more I want to do. And that's the way you need to live life.
What are you looking for for a price per unit on your construction?
Okay. This is part of the problem that I had, that this woman developer that I spoke to, is I was starting out with the price of the land, and then I'd work that way. She says, no, you got to start with the end in mind and then back into the land costs that way. Okay, good. Okay. So that helps me out here. I think and this is really going to have a huge impact on whether this works or not. I think based upon the numbers, we're looking at about $120,000 per unit is what it can support at the rents that they're getting now. Mm-hmm. And so that is I've got to figure out either stick built or modular, and figure out what those costs are going to be, and then back into it from there.
Mm-hmm.
Yeah.
Very cool. Now we've been kicking that around for a little bit as well, so we'll keep you posted on that.
Yeah.
What's the best way for folks to get a hold of you?
You can go to my website, multifamilyinvestingacademy.com, mfia.com, or just you can reach out to me at Charles at Dobens Law, DOBENSLAW.com. Charles at Dobens Law.
Gino, I think that says mafia.
Yeah. See this. This is why he doesn't read books.
Jake's a creative dude. You know what I'm saying? So,
Gino, what else you got here today?
There's been a lot to digest. I think the most important thing that we've talked about is really the demographic shifts and what's going on. And you don't have to invest in your backyard. I think choose a market where you feel comfortable. And I don't think it's a novel idea. I think everyone's been doing it for the last few years. You see what's going on. So don't think you're the only one who's doing it. And if you can't, find somebody with boots on the ground in that market and partner with them. Multifamily is a business. Multifamily is a team sport. It's education times action equals results. Charles, I think, is a product of that also. He said he went all to all the gurus like I did and like Jake did. We learned from them. You find success leaves clues. Don't do it on your own. Find somebody who's out there who's doing it and replicate their strategy. I mean, for Jake and I, we have the proprietary 3-step framework. It's buy right, manage right, finance right. Charles has got his system with his students. Find somebody who you gravitate towards, learn from them, learn from their mistakes, dramatically cut your learning curve, and go out there and do it. But you need to have some type of pain in your life. You need to have some type of clarity of why you're doing it, because multifamily is the greatest business out there. I don't care what anybody says. But if you're just doing it because you think I'm going to just be passive and do, that's fine. You can get into the LP and invest with the syndicator. That's fine. That's not what we're talking about. We're talking about having more of an active role. And even if you're going to do the passive side, Jake, I think it's really important. You still need to know all the steps about multifamily. You still need to make sure that the sponsor is doing the right job and that you're investing in the right market, and they have the right property management company, and they know how to underwrite the deal, and they have a business model, and they're treating it as a business. So if you don't do all of that, even in the passive side of it, you're going to fail. So I don't know, Senziano, what else you got for me?
No, I think that sums it up good, man. We're in the right place. We're in the right states, and we're enjoying life. So Charles, thank you so much for your time today.
Guys, so great to talk to you. It's always a pleasure. And, anytime you want to come back on my podcast, please, leave your name at the door, and I'll see if I let you in.
Fair enough.
Thanks, Mr. Mafia.
Thanks, guys. I'll talk to you soon.
Ciao.
See you guys.